The UK buy-to-let market is going through a major transformation, with London back on top, leading the way for new landlords. And rents, they are at record high, with tenant demand outpacing supply. And landlords, well, they're still navigating complex regulations, high costs, but also the potential impact of the Renters' Rights Bill. Is 2025 the year where you should buy and invest in property in the UK? Or perhaps the year that landlords continue to exit the market? In this video, I'm going to break down London's comeback as the buy-to-let capital, the hottest investments locations in the UK right now. I'll also talk about how much rent is actually costing tenants, but also whether confidence in landlords is actually growing or fading away. Now, if you're a landlord or thinking of getting into buy-to-let, this is a video that you do not want to miss. London is once again leading the way for the UK buy-to-let market, with a whopping 13% growth of new buy-to-let landlords from 2023 to 2024. Now, that is a significant jump from a modest 4% of previous years. So this comeback from the capital has been driven by strong tenant demand, particularly from young professionals, but also from students. If you're familiar with London, you know that we have prestigious universities scattered across the city. And this attracts not only students from the UK, but also international students across the world. Now, the second thing is regeneration projects. Now, if you've been to London lately, you'll see construction sites all over in different boroughs, and also even new postcodes being created. And third, and certainly not least, is going to be renewed interest by those multiple landlords who own multiple properties, expanding their portfolios. At the same time, we are seeing a reshuffling of buy-to-let hotspots across the UK. Let's take Glasgow, for example. Once topped the market between 2022 to 2023, at the top of the market, now has dropped to 10th place, slowing their growth to just 7%. Meanwhile, Birmingham, Leicester and Leeds have surged in popularity. Now, this reflects a growing interest in these regional markets where landlords could get better yields. And London, of course, is at the very top at 13%. If you, like many other landlords out there, are concerned about the Renters' Rights Bill, make sure you follow the link on the description for a free 90-minute webinar on how to protect yourself. London remains one of the most in-demand rental markets in the UK. Thriving job market, but also a high student population, and again, those regeneration projects continuing to drive demand. Now, the capital really does give stability and give steady rental income to those landlords. Let's address the elephant in the room, because I have a lot of landlords that say, yeah, Danny, but the capital offers crappy yields. And if I go north, I can get 8%. And that may be true in some parts. And yet what we can see is that London continues to offer potential unmatched capital growth more than any other city in the UK. And this makes London right now home to the highest concentration of multiple properties of landlords across the UK, followed by Manchester, Birmingham, but also Nottingham. Now, this indicates that there's a renewed confidence in the buy-to-let market, and this is despite those higher costs, but also tighter regulations. Simply Business says it's possible that stamp duty increases, higher mortgage rates, and stricter energy efficiency regulations may make portfolio ownership less appealing or simply unattainable for landlords. In this context, houses in multiple occupations may become increasingly attractive investment route. And the truth is that HMO has already been attractive for many years, especially for those areas that have high rental demand and students. And some of these areas are going to include London, Birmingham, Bristol, Manchester, Leeds, Cardiff, Nottingham, Edinburgh, Liverpool and Coventry. Over a third, that's 35%, said that they saw their mortgage repayments increase in 2024. That's up from 31% in 2023. Now, 10% of those say that their repayments increased from £500 up to £1,000. Chief Executive at Simply Business UK says 2025 will be a game changer for UK landlords, with new regulations and rising costs reshaping the market. It's incredibly telling that we're starting to hear landlords talk about availability of tradespeople in the context of their investment decisions, driven in large part by the new minimum energy performance certificate regulations. We know from our research that half of landlords need to make improvements to reach an EPC rating of C, and over a third, 34%, report they will need to spend up to £10,000 to comply with the rules. If you're finding this video helpful, smash that like button. It really does motivate me in pushing more of these videos out there. So how much is rent in London? Well, the capital remains one of the most expensive places to rent a property across the UK. And if we look at the average rent, we can see that it averages out right now for new tenancies just over £2,100 according to HomeLet. And over the past 12 months, we can see that's increased by 6%. And of course, that can vary depending on different locations in London because property and real estate, of course, is hyper-local. And this average rental price is likely to be across all of the boroughs in London. If we focus just in prime London and the boroughs there, it's likely to be higher. And yet, if we break this down from the bottom end of the market and look at rooms through the entire boroughs of London, we can see that on the high end, no surprise, is going to be Westminster, Kensington, and Chelsea. On the lower end on rooms, we can see that's going to be Croydon and others. And yet, if we look at from a studio point of view, Tower Hamlets and this other one there as well. And then if we look at one bedroom flats, again, we can see Kensington and Chelsea and Westminster right at the top. So despite all of this new regulation and all the scaremongering from the media and also a little bit from my channel, we can see that landlord's confidence is up. According to Pegasus Insight, we can see that 37% of landlords said that they felt good or very good about business prospect. Now, this is up from 33% in Q4 of 2023. Large profit landlords are the most optimistic, with 71% saying they felt positive. Even with these new regulations, there's optimism around new business prospect, the capital gain tax, but also the rental yields. And yet landlords are still understandably concerned about the regulation, especially the Renters' Rights Bill. In fact, 75% of landlords say that they believe that the Renters' Rights Bill is going to negatively impact their business, with over 40% saying that's going to have a significant impact, with over 60% saying it will disrupt the rental sector as a whole. However, rents are rising. In fact, 73% of landlords said that they increased their rent in 2024, with others saying that they are planning to increase even further this year, 2025. And when we look at below market rental rates, we see that over 80% of landlords said that they had at least one property below market value. Landlords letting below market rates believe they are subsidising an average of 4.7 properties, typically by £144 each per month, equating to a total of £677. The larger landlords are more likely to report letting at least some of their property portfolio below market rates, with a belief that they are subsidising 12 properties each by an average of £120 per month, a total monthly loss of £1,500 or thereabouts. Even with these subsidised, the average cheap rental yield remains close to Q3 2024, 10-year high, at 6.4% in Q4. Let's wrap this up. London is back on top, and there are regional hotspots that are still providing some great opportunities for those higher rental yields. And then when we look at the high rents and demand, it continues to make property profitable. And there are opportunities with HMOs. But one thing I want to leave you with is that the UK has been pretty much flat over the course of the last 10 years, including London. And yet there are some early signs that indicate that it may not stay that way for too long. Now, I'm not talking about a boom. We're a long way away from any boom. And yet I do believe that there may be a window of opportunity that may be closing.